My guest today is Brandon. Brandon is the CEO and co-founder at Treehouse Finance. Treehouse is, well, it's leading the charge and revolutionizing the decentralized fixed income market. We'll learn all about this today. Welcome to the show, Brandon.
Hey, thanks for having me, Andy. Excited to be here.
It is a pleasure. Let's do what we do at the beginning of the show. It would be super cool if you could please introduce yourself. Would love to hear some of your personal and professional backstory. What have you been doing in the lead up to co-founding at Treehouse?
Yeah, for sure. So, hey guys, I'm Brandon. I'm co-founder and CEO of Treehouse. Background-wise, prior to this, I was at Morgan Stanley doing credit derivatives. I started Treehouse 4 years ago with a group of friends, and I got into crypto while I was still at Morgan Stanley. And one of the first things that really piqued my interest was when Uniswap came about. The concept of automated market making, and we had a crew on the trading floor. By day we were trading our own asset classes, but by night we were degenerates. Quite a few of these guys went on to start crypto companies, hedge funds. Some of them started their own family offices, fully focused and dedicated only to crypto. And some bigger names like Amber. So they the guys there started it, was in the same team as I was. And when I saw all these, all the trailblazers moving on and jumping to the dark side, I took it as my cue to also jump on. So, we started Treehouse, really starting as a data analytics platform, trying to build a portfolio management systems to help our DeFi trading activity. And over time, it's evolved into this fixed income layer that we're building now.
Yeah, so that makes sense. I was wondering about that, Brandon. So to begin with, yeah, you launched as more of a traditional DeFi protocol. Yeah,
I mean, we're definitely still a DeFi protocol. We will still call ourselves that. I'll still love to have that tag. But it's evolved over time. I think the state has transitioned over the past 3-4 years from being in its own world to where now we see a more regulated world where institutions are peeking in and seeing some of the innovations that are happening. So it's not to say that we have pivoted or anything. We've basically transitioned ourselves, evolved ourselves to be able to serve both needs. And ultimately, fixed income, this field that we're looking into, it's massive for institutions. It's by far the biggest investable asset class. So we can't just tackle the on-chain, unregulated world. We are very much excited to be able to speak to some of the biggest guys, like even BlackRock.
Yeah, absolutely. All right. Well, just explain a little bit more about the fixed income market for people that maybe aren't quite so familiar. Just lay it out a little bit for us, please, Brandon.
Yeah, sure. So fixed income is an asset class that houses the investable class that relates to paying an interest over time. That can include somewhere as simple as like a bank deposit to a mortgage, and even crazier derivatives that exist. In the traditional finance world, fixed income is actually 5 times larger than equities. So, people are, talking about Tesla and all these stocks. Fixed income is way bigger. Unfortunately, retail, they don't get to play it too much because the size that, fixed income products are, oftentimes they're in the denominations of at least 100,000 to even like $1 million per bond. And that has made it very much so an institutional game. But, with all things DeFi, that's something we're against, right? We're trying to bring it down to the average retail user.
Yeah, very nice. So I suppose, why is it then that you've specifically targeted fixed income? Is it because you want to target institutions and just, make it possible for institutions to perhaps play in the DeFi world via fixed income products?
That's one big reason for sure. I mean, when we look at, that's not the only reason we're targeting, the spectrum, right? But when you talk about the state of crypto today, and you look at the timeline, BTC came out in 2009. We had GBTC come out in 2012. That was really the first instance of institution being able to get involved into Bitcoin. Of course, you had like Ethereum come out in like 2015, and then you have BitMEX, you have Deribit in 2017, I believe, and then Binance, Firebase, and all the big guys started popping up and taking off. Institutions throughout this cycle, right, hasn't really come in full force until very recently with the ETF, right? With BlackRock ETF, Fidelity ETF. We started with Bitcoin ETF. We now have ETH ETF. In terms of where institutions are going to look to next, yes, perhaps they might get into some aspects of DeFi, but certainly they're not going to jump into the till end, right, of all the degeneracy and all the stuff that's been living in our world. I think the next step for them is to get into the fixed income space because within crypto, and part of that is proof of stake. So when you look at proof of stake, it's the next simplest step for any institution. Now that they can hold Bitcoin, now that they can hold ETH, especially ETH, right? They can stake it and earn a return on that asset. And if you treat staking, or at least proof of stake, as the safest yield that you can receive, it makes sense for, rather than just holding ETH, they should hold, a yield-bearing instrument of that. So our view is that institutions will, when they come into crypto, especially through whether it's pure crypto assets like ETH, it's going to be fixed income in nature. When it's related to RWA, similarly, it's going to be fixed income in nature. So that's definitely on the institution side. But, I think on the retail side, as more and more institutions come in, they're not going to be left out, right? These products are going to be all these institutions that are coming in, they're going to enable retail to get involved as well. So the spectrum that we're targeting is across the board. Of course, retail is ultimately where the end demand is coming from a lot of the times. So we're not just targeting institutions.
Very nicely said. Thank you, Brandon. So I guess at the moment, you kind of got like there's the two key products that you guys are, I guess, building or offering on Treehouse, right? So let's go through those maybe one at a time. So firstly, tAssets, is that how you say it? So that's what you're that's what you're talking about with the proof of stake, right? With liquid staking. So just run us through how the tAsset offering works, Brandon.
Yeah, sure. I mean, I can start from the beginning. So Treehouse, again, we call ourselves the decentralized fixed income layer. Yep. The premise is pretty simple in that we're trying to build infrastructure to enable new primitives to exist, and particularly in the fixed income space. We've built two different solutions. As Andy has mentioned, the first version is called tAssets. And then the second product that we have is called DOR, which stands for Decentralized Offered Rates. The reason why I bring this up is because they're very much intertwined, but let me start by explaining what tAssets is. So tAsset is a simple LST. You can think of it that way, but there's also a twist behind that, in that when a user stakes their ETH into our smart contract, we do an embedded arbitrage strategy on top of the proof of stake token that we receive. So at this moment, we work with Lido. We announced a partnership together. We don't, effectively, if a user brings in their ETH, we move it directly to WST ETH. And then from there, that's when we take the next stage, which is we move it into this strategy that earns users an additional pickup of 50 bits to 1.2%, depending on the day, of course, but annualized, it's around that figure. There are three specific features that tAsset provides. And I'm talking about it from the ETH perspective. We're going to have multiple tAssets that would exist on different layer ones. But the first feature is that it's democratized access to interest rate arbitrage. Previously, only institutions were able to do, or even in the TradFi world, it's all institutions doing all these quick arbitrage. We're democratizing it and allowing anybody to get involved. The second feature is that tAsset is a broader narrative. It's not just to earn yield. The main goal of tAsset is actually to keep the market efficient. And the best way I can explain it is that in the traditional finance world, if you're borrowing US dollar, I mean, even if you're retail, you're not going to be able to borrow US dollar below like the risk-free rate, right? That would be like the equivalent of the treasury curve. And if there is an opportunity, it will be arced away immediately. At the same time, if you come back to crypto, this exists all the time, right? On-chain rates are extremely fragmented. If you get on Aave, you get on Compound, you get on Spark, you get on Morpho. The rates are extremely, fragmented. And this exact arbitrage strategy that we're doing is helping to keep the market efficient. So by arbing away that, our goal is to help converge rates so that they're very much uniform. And only then can we build a real proper fixed income infrastructure, like an environment for new primitives to thrive. So tAsset is extremely important to help enable what we're going to be talking about shortly, which is Door. And the third feature very quickly is that tAsset powers Door. So let me take a pause. I'm sure you have a lot of questions. And yeah.
Yeah, no, I mean, that'll make sense, Brandon. I guess like just give us a sense of like what kind of metrics are you looking at? What's the total value locked of people that are playing around with this so far? What kind of adoption are you seeing?
Yeah, so we launched tAssets roughly close to 4 months ago now. And since then, at peak, we had about 400 million in TVL. Our ETH continues to grow, but the price of ETH has dropped significantly. So you can think of us holding around 125,000 ETH, which equates to, in today's terms, about almost close to 300 million TVL. In terms of the unique depositors that we have close to 30,000. And we are on several different chains. So right now we're on, of course, mainnet Ethereum. We're on Arbitrum. We're going to be moving into a few other chains shortly. In terms of like your opportunities and partnerships to take tAssets and do, DeFi activities with it, we're on Pendle right now. We're one of the highest yielding PTs at this moment. From a lending perspective, you can get on Compound. Very shortly, we're going to be on Euler. And in terms of looping, you can do it on Gearbox. Contango's coming. So there's quite a lot of use cases. Just the same way you can take an LST to do all these similar exercises in DeFi. The key difference here is that, not only are you helping to keep the market efficient, you're earning this additional yield. So we like to say internally, like, if WSD ETH, then why not just hold tETH, right? So that's our goal. We're trying to make it as usable, as composable. At the same time, we're not competitive. We're partners with Lido. And Lido is, of course, the biggest protocol in this space today.
Yeah, of course, Treehouse Finance. Yeah, so look, I'd love to we'll circle back to kind of, maybe just dig into what's happening more existentially, I suppose, with DeFi, with Ethereum, with, different market participants or narratives, how people are viewing Ethereum and DeFi at the moment. But before we do that, we should talk about, DOR, Decentralized Offered Rates mechanism. That's what that is, right? So, run us through, Brandon.
Yeah, so Door is a new primitive that we built in for the space. And it's not existed before, even in traditional finance. But the way I explain it is, I like to explain it in the context of traditional finance, because we've taken a lot of inspiration from there. And we're trying to marry that into the DeFi world. So let's go back to the 1980s, because the 1980s reminds me of fixed income in crypto today. Still extremely underdeveloped and very promising. As we know, it's now 5 times larger than equities in TradFi, but in the 1980s, it wasn't as big. At that point in time, you could get a loan, you could get like a credit card. A lot of the simple features were still available then. But if you get a mortgage, if you go to Citibank, you open up your term sheet, so like literally the legal document that you receive, there will always be a reference rate when it's to do with, loans or any kind of fixed income product. And if you go to Citibank, it will be the Citibank reference rate that is related to your loan. If you go to Bank of America, you receive the Bank of America rate. So the problem then therein at that point in time was that there were so many different benchmark rates that exist, so many different reference rates, and that caused a lot of confusion. It was extremely capital inefficient. If a user or if a bank even wanted to recycle that risk, they weren't able to. They would have to talk to the other bank and say, hey, my methodology is calculated this way. What is yours? Is there any way we can reconcile it? That all changed in 1981 when this benchmark rate called LIBOR was born. So LIBOR stands for the London Interbank Offered Rate. And when LIBOR was born, it pretty much unified all the benchmark rates for the US dollar market. And it changed the game. From then on, you saw a hockey puck in terms of fixed income products. New primitives were being developed. Before that, interest rate swaps didn't exist. It was born the year after that. Mortgage-backed securities were developed a few years later, let alone options. All these swaptions and all these things started developing. So it was all catalysts. The main catalyst was catalyzed by a unified benchmark rate. But as we, without going into too much detail, LIBOR has a lot of inherent issues. It was prone to manipulation, collusion, and it was very recently replaced with another benchmark rate called SOFR, which also has its own issue, which is being very, very centralized. So coming back to crypto, and we talk about Ethereum, or just layer ones in general, it's meant to be decentralized. It's a decentralized economy, a country, if you will. And, if you want to get into a fixed income product, there's really no benchmark rates that exist today. On the TradFi, from the CFI side, there's like Coinbase, has their own, Binance has their own, again, very, very fragmented. So our view is that why not build a mechanism that unifies this, and not only unifies it, but decentralizes it. So DOR effectively takes principles from TradFi of LIBOR. We've married it with the principles of SOFR, which is SOFR, another type of benchmark. We've built it in the form of a chainlink oracle. We've added staking and slashing to solve the issues of collusion. And we've introduced 5 stakeholders that collectively work together to power this entire new layer. There's a lot of use cases beyond that, we're working with some big market makers that are trading Ethereum staking rate forwards on top of us. We're on track to hit, in terms of volumes in the billions. And we've not announced any of this. In terms of other use cases, protocols can build, interest rate swaps settled on chain using us. We're working with PhDs to do that. In terms of the type of stakeholders, we also have a group called the panelists. And we have some of the biggest staking houses that are involved, that are providing data that decentralizes this data. Think of DOR as also like a framework for anyone to build a decentralized benchmark rate. So it's a whole new primitive. Let me take a pause there again.
Yeah, no, that's exciting, Brandon. I can absolutely see the need for it, and that's a game changer. Being able to, have I guess a system for setting the reference rates that is, decentralized. It's transparent, so people can put much more trust in it. And you're right. Something like LIBOR that most people will have heard of, could potentially be prone to some forms of manipulation, right? But that's not the case with DOR.
Exactly.
All right. So I guess what is next for you guys with Treehouse? Like, I guess you'll be working on just rolling these primitives out, increasing adoption, and making more people aware of it over time. What else are you guys working on?
Yeah, sure. So I'll split that, in terms of our roadmap into 2 fronts. One talking about tAssets specifically, and then DOR. So on the tAsset side, you're going to expect a lot more chains coming. We're going to be on, you can kind of go down the list of the top layer ones. We're going to be announcing several big partnerships with foundations even. So users can get involved by staking their version of an LST, as well as getting this embedded arbitrage strategy. In terms of integration, there's going to be a lot more, partnerships in terms of, with lending protocols. We're hoping to get on Aave very shortly soon. We also have, when you stake tAssets, we've gamified it as well. So around the point system, you receive points. We call it nuts. And in fact, actually today, later today, and on the 19th of March, I know this might come a bit later, but we're going to be launching a game room where effectively users can use their nuts to play games and to earn more nuts. So it's going to be a lot of fun. You can check it out. Coming over to the DOR side again, DOR has a lot for us. Very recently, DeFi Llama introduced a whole new category. They called it DOR, and we're the only ones in the category, which is amazing, right? They rarely add new categories, right? It's a new category that's defining the fixed income space in crypto. So there's going to be a lot more operators that are going to be launching on top of us. So think again of us as like a framework, where people can use it to build their own system. We're partnering up with a very, very big benchmark provider in the crypto world. We're also partnering with the largest LRT. So that's going to be announced very shortly. They're going to be building an LRT, effectively an LRT door for users to reference. We're also going to be launching together with a few perp dexes and maybe even, shortly beyond that, CeFi exchanges where you'll be able to trade the forward structure of some of these rates that we've built, which is extremely important for hedging for institutions. Our goal right now is to just build as many use cases as possible on top of Door. And how we're doing that is we're encouraging people, for anyone listening that's interested, you can apply for grants. We've been supporting a number of protocols, some very big ones, some new ones as well, such as Horus. Again, I mentioned there's a group of PhD building a way to settle interest rate swaps. We're working with another team using the new ERC 6123 concept for interest rate derivatives. So a lot of new products are going to be coming out from Door. I'll stop us there, but it's going to be very exciting.
Very exciting indeed. And I love the fact, Brandon, that even though it sounds like your primitives are very, there's slightly more heavily weighted towards institutional use at the moment. Although, anyone can use them, but even the institutions enjoy a bit of gamification in the form of, squirreling away those nuts. That's just the digital world that we live in at the moment, right?
For sure, yeah. It's again, just want to emphasize, right now, we can't do this ourselves. We need retail as well. We need the DeFi users, investors to come on board, support, get involved, because ultimately our goal is to help converge the markets with tAssets. They come support us, join in and get in the games. It's just as much for them as it is for an institution.
Yeah. And I guess it's a good segue, Brandon. I said before, be interested to get your thoughts on, suppose, where DeFi is at, the narrative around Ethereum. Ethereum has struggled a little bit over the last 18 months or so. Maybe, the narrative around Bitcoin has always been a little bit easier. Bitcoin ETF has done well. Ethereum ETF less so. It's kind of been a funny old market as well. Is it a bull market? Is it a bear market? Is it somewhere in between? But it's just a volatile time in the world, certainly in crypto. These are big questions, Brandon. So I'm sure you have views, though. Maybe just to start off with, how do you kind of think about Ethereum at the moment?
Yeah, that's a huge question. I think I can look at it overall, taking a step back of the state of the entire market, and kind of slowly go down to Ethereum. So let's talk about the entire global markets, right? That's sure. Right now, if you put a value to it, objective value, it's around 500 trillion. There's many ways to dice that pie, right? You can dice it by countries to their GDP. You can dice it through asset class, right? Again, mentioned fixed income being one of the largest. Within that 500 trillion bubble, crypto only represents 2.5 trillion. So we're less than 1%, right? Less than 0.5% even still at this moment, right? And thinking of it as a bubble and, crypto being this little tiny bubble here, there's only a few ways for this bubble to grow. One of which is you grow the bubble inherently through value that is created. Another one is through inflows, right? So at this very state of this market right now, it's rather the opposite, right? Because there's been a lot of things that are extractive internally, down to meme coins and scams that are, or even big hacks that is taking out $1 billion out of supply. Really, there's also outflows that are coming out. Let's zoom in even further, right? And of course, when you talk about the big bubbles, macro is a big decisive factor in how this balloon grows even, right? If there's trade wars, the Ukraine war, the bubbles expand and deflates, proportionately. At the same time, crypto will shrink. Let's zoom in again. So from that little bubble, let's zoom in and bring it out. Within this 2.5 trillion, 80% of the value is BTC. As you mentioned, BTC is a lot easier to understand. It's a lot more easier to understand because it's treated like perhaps like a gold, like a reserve asset. The good thing about, the way I look at BTC is that, and we have to look at it even when you talk about Ethereum, because it helps really drive the entire bubble, because this represents 80% of the bubble. So with BTC, a lot of that supply is still locked up, and the supply that is being traded around is really what is deriving the price of BTC. Let's just say of that 80%, 10% of it is the one that is floating. It's on exchanges that are being actively traded. It's in the ETF. In the ETF side, which represents about 50 billion right now, of the Bitcoin market, we're seeing a lot of outflows, right? I think we can look at the data. Money is just siphoning out. And part of that is because of the unwind of the basis trade. So a lot of hedge funds are doing the basis trade right now. And effectively, when that's unprofitable, they leave that trade. That means net selling pressure, and the bubble grows even smaller. Of course, Binance, Bybit, and all these guys, Coinbase, they're also trading, but that is more like natural retail flow. The remaining 20%, so coming to the space, which is where Ethereum is, of whatever that's left, 50 to 60% of it is still Ethereum. So while people talk about Ethereum as still, when I look at my Twitter, it seems like it's, Armageddon, right? Oh, everyone's leaving, Ethereum. But if you think about it, it still comprises of 50% of the entire market. And anything outside of the 50%, it's like, like Cardano, right? Or like a Ripple, right? Nothing to say bad about them, but, in terms of the innovation in crypto, it's still all very much in Ethereum. So I think, my view, when you take it holistically, Ethereum is still the leader in DeFi in terms of innovation. It's where capital is. When you zoom into the Ethereum space or the DeFi space in general, get on DeFi Llama, you can just see the dominance of Ethereum, right? Of the $90 billion that DeFi Llama has said at its value, or the DeFi market is valued at, a majority of that is sitting in Ethereum or related to Ethereum assets that are moved to other layer ones. So it's all still denominated in Ethereum. So I'm still very much bullish, right? I look at Ethereum as, it's still great, right? It's, what's happening on the price pressure. Clearly, there's a lot of big people that are selling, because the only way for it to go down, when price goes down, it means someone click the sell button, right? So I looked at it as that way. But I think, with what's happening from the institutional side, there's been a disconnect with retail being very bearish. But when you talk to institutions, so I was in New York 2 weeks ago. I met BlackRock. I met 21 Shares. I had 30 meetings in like 4 days, meeting Morgan Stanley, Goldman, and all these folks, all their crypto arms. And they're more excited than ever, right? So there's been a disconnect. And I think we should zoom out also from a timeline perspective. And I think Ethereum is by far, still the best chain when it comes to DeFi. There's more and more stablecoin. In terms of last year to this year, the stablecoin market has doubled. There's like $200 billion in stablecoin. That's effectively liquid tokenized treasuries, which is also a fixed income instrument. And more, what I'm excited for also, which I think a lot of people talk about, but to put it into perspective, that $2.5 billion bubble, that $1 trillion bubble, that I'm talking about. Another thing that can make it grow is if you bring on assets in there. So of the 500 trillion, all these real world assets can actually move on chain. And that's a way to grow it. And they're going to do it on Ethereum. Of all chains, right? So that's my take. I think, definitely we're not, we're in a technical definition of a bear market where Ethereum has dropped more than 20%, and Bitcoin as well. But when you talk about the institutions, and that's where the real money will come in, and they'll come in hard. Well, again, how they trickle in, I think they'll focus on fixed income first. But it's going to stream into Ethereum, and Ethereum's going to take a cut of that. And I'm long ETH. That's what I can say.
I like it. I'm long ETH. Yes, very, very well said, Brandon. And I think it's a good observation, and you see it on crypto Twitter, the big difference in sentiment between, I guess, what you'd call, retail versus institutional crypto Twitter. But, the problem is, I guess, if too many traders or retail participants got too sidetracked by the likes of meme coins and so on, and we've seen that market, get hit pretty hard. So you can understand why that sentiment is perhaps down. But yeah, I think you're right. There's certainly a bright future still, and the builders keep building. The institutions are coming. It's just a volatile time in the world at the moment, but that will settle down. Look, just to finish off this part of the podcast then, Brandon, just, what's the kind of the next, I don't know, the immediate future for DeFi, and what is the role that Treehouse will play in that?
Yeah, so I've talked about, very specifically to Treehouse, some of the product lines they're going to be launching, but I think more broadly, what we want to be known for and what we want to focus on, I'll split it into three specific, points. The first really is that in order for institutions to come, or even for new products to exist, we need to build trust, right? And the ethos of crypto is decentralizing things in general, whether it's the bond lending market with Aave, or even data transfer with Ethereum in general. I think decentralizing the rate setting process, as we have with Door, is very important, for fixed income to enable to exist in crypto. The second thing is that we want to enable new markets, right? Again, I talked about Door enabling new primitives. I think our job is to facilitate the creation of products and advanced financial instruments that can expand the scope of DeFi offering, that will trickle down to retail. Very soon you're going to be seeing, in my opinion, a few years down the line, like proper loans that can be traced back to the real world. And you're going to need a rate that is involved. And, whether trust a centralized authority or trust a decentralized system, or an infrastructure that can help enable decentralization is extremely important. What our focus on the third point, I would say, is, bridging DeFi and TradFi. Yes, there's going to be a segment, which I love, the unregulated side, right? That is DeFi as it is today. It's the greatest market. All right, I had so much fun over the years, being from MS, trading it in the middle of the night, leaving my job, to coming on here full time. But I think there's also going to be a world where DeFi and TradFi will be bridged, and it'll just be finance, right? And that needs to exist if we want the space to grow. So I'm not so much so to be saying that, only one can exist. I think they're not mutually exclusive. I think both of them can exist. And by seeing that come to fruition, by introducing like yield curves, benchmarks similar to those in traditional finance, Door and Treehouse can help bridge the gap between, DeFi and TradFi systems. So I think the next few years, or at least, when you ask me genuinely, like 2 years ago, when do you see this world that I just kind of envisioned, spelled out, coming to fruition? I would have probably said like 5 to 10 years. But with, my conversations, going to New York, going to the US, and with the new administration changes, right, the new posturing, I think it can be as close as 2 to 3 years. So I think fixed income will be a staple in the space for crypto. And we're excited to be here, and we're excited to help it grow.
Awesome. I like it. Just to tell people then, Brandon, for those that want to, have a look at Treehouse Finance and explore those primitives, what is the best way for people to do that? What should they do? Where should they go?
Yeah, sure. You can, access our website, www.treehouse.finance. If you want to really learn a lot, I actually wrote a book on the topic. And you can find it on our website. It's under resources, I believe, and it's called One Rate to Rule Them All. I talked about, institutions are coming as a meme, what Andy mentioned earlier. It's all in there. But if you're keen to just stay up to date in terms of our developments, Twitter will be the best venue. We are at Treehouse Fi, so at Treehouse Fi. And if you're interested to follow me as well, I was just telling Andy, I hope I don't confuse people that my tag says my two ways on here rather than Brandon. So that's the handle that I use on Twitter as well.
Awesome. It's time to finish up the episode, Brandon, and we do that, of course, by running you through the very famous Crypto Conversation hot take round. Are you up for it?
Sure, let's do it.
Let's do it, Brandon. I'm just going to run some questions at you, and I just want you to give me your honest, hot take style answers if you like, but there's no right or wrong way to do it. I think we know what you'll say to question 1, but let's see what you do have to say. The question is, where would you say that you sit on the Bitcoin maximalist to multi-chain opportunist spectrum?
Where do I sit? I'll say I'll sit right in between. I don't like sitting right in between because that's like picking neither. I'm tilting more towards the multi-chain world. So I see where Bitcoin, I see the value what that Bitcoin brings, but that's not to say that that's the only thing that needs to exist or can exist, right? A lot of layer 1s, layer 2s need to exist, and they are performant for different use cases. So I think, I'm tilting more towards the right side.
No, I thought you would say that. What would you say then, Brandon, is your firmest conviction crypto opinion?
Interesting. Firmest opinion in crypto. Well, let me try to, box it within the field that I'm in, right? I guess, I think I expect fixed income to be the largest asset class within DeFi as well. And I don't think that's the case right now. And I think people perhaps can't see that, but I very, very firmly believe that that's going to be the largest asset class in blockchain.
All right. Well, another way of thinking about this, Brandon, of course, is, Bill Gates, who famously said that we tend to overestimate what we can accomplish in 2 years and underestimate what we can accomplish in 10. So look, 10 years in crypto is a long time indeed. But yeah, anything you like here, 10 years time, DeFi, Treehouse Finance, fixed income, what does it all look like?
10 years time? Wow, 10 years time, right? I think, maybe just for the space in general, I think I briefly mentioned, similarly earlier in my answer that I think you'll see a world where there'll be 2 kind of segments. Of course, there'll be the unregulated world, but I think the best way to integrate crypto into the rest of the world, the rest of the $500 billion in asset, is where you can abstract away the user interface, or when a user is using a specific product and not knowing that, they're using a wallet, they're not even using a blockchain, right? Whether it comes down to payment, and rather than calling it, decentralized finance, centralized finance, or traditional finance, I would think of it as just finance, right? And crypto being an asset class that is, it's going to be, it's here to stay for sure. And that technology will become like every day, the way we treat the internet, the way we treat the cell phone.
Yeah, very well said. Very well said. It brings us really to our next question, and it's the last question, Brandon, and it is, what is your favorite science fiction book, film, or a TV show? Right.
I would say, Game of Thrones. by far. I don't know, is that science fiction? I guess. I mean, it's not so much like.
I think Game of Thrones is.
It's more fantasy.
It's more fantasy, science fiction adjacent. But people have said exactly that before on the show. So
or another one, Cloud Atlas. Yes, Cloud Atlas, that was one of my favorite books when I was growing up. It was very, very trippy, and the movie didn't do it justice. And the book, it was pretty deep in the sense that it was different dimensions and even different ways of writing. And it blew my mind in terms of thinking about people from different perspectives and kind of being in the same world at the same time, despite it being so different.
Yeah, I was thinking you might even go for another book, which I think is well known in the Ethereum community. And I know you referenced it at the beginning of One Rate to Rule Them All. And of course, it is the Dark Forest.
Yes, I read it for sure, but it's not my favorite, unfortunately. So I was trying to answer my favorite. But definitely Dark Forest, a very, very, very it's a classic.
It is. It's a classic. All right. Well, a classic for a reason. Look, this was actually a lot of fun, Brandon. Thank you so much for coming and spending some time with us today. Just to close it out again, tell people where they can go to learn all about Treehouse Finance, how they can download one rate to rule them all. I was just flicking through the PDF online now, and it looks pretty cool. Be fascinating there for anyone that is, a finance nerd, a DeFi nerd into fixed income. Man, that looks like a very cool read indeed. So just shout out your socials, all that good stuff. Brandon, go for gold.
Yeah, sure. So you can find me on Twitter at my2gweis. It's MYTWOGWEIS. Treehouse Fi is our official channel. That's TREEHOUSEFI. And in terms of our website, where Andy mentioned you can find our book, it's www.treehouse.finance. As simple as that.
Awesome.
Thank you so much for having me, Andy.
Thank you so much, Brandon. All the best, and bye for now.
Thank you.